NVIDIA crushed it in 2023 and 2024, but is the stock still a smart buy in 2025, or has all the good news already been priced in? Let's uncover what the market isn't telling you. Over the last 2 years, NVIDIA has dominated headlines and investor portfolios alike, from leading the AI chip race to jaw-dropping earnings reports and a high-profile 10-for-1 stock split. NVDA has been the poster child of the AI boom. Whether it's powering ChatGPT, fueling autonomous vehicles, or enabling high-performance cloud computing, NVIDIA is at the center of nearly every major tech trend today. But here's the big question. Can the stock keep climbing, or are we nearing a plateau? As valuations soar, competition grows, and macro risks loom, investors are left wondering, is NVDA still a buy, or is it time to take profits? Before we dive in, don't forget to subscribe to Stocks Telegraph for cutting-edge stock insights that help you stay ahead of the market. And drop a comment. Are you buying NVDA in 2025 or waiting on the sidelines? NVIDIA remains the undisputed leader in AI hardware. Its flagship H100 and H200 GPUs are powering next-gen AI workloads for Microsoft, Meta, OpenAI, Amazon, and more. These chips are the backbone of generative AI and cloud infrastructure, enabling everything from large language model training to real-time inference. But NVIDIA isn't just riding the wave, it's setting the pace. The company's new Blackwell GPU architecture, designed to succeed Hopper, promises greater performance efficiency and scalability for hyperscale data centers. With Blackwell already being adopted by leading cloud providers, NVIDIA is once again shaping the future of AI computing. Of course, competition is heating up. AMD's MI300 chips and Intel's Gaudi processors are gaining attention. But while rivals are improving their hardware, NVIDIA's real strength lies in its software ecosystem, specifically CUDA, which remains the gold standard in AI development. With years of developer adoption and deep integration, it's a moat that's hard to replicate. In short, NVIDIA's AI dominance is still intact in 2025. But does that mean the stock still has room to run? NVIDIA's latest earnings crushed expectations. For the fiscal fourth quarter ending January 2025, revenue hit $39.3 billion, a 78% year-over-year increase, and up 12% from the prior quarter. The data center segment alone brought in $35.6 billion, growing 93% year-over-year. These aren't just impressive, they're historic. But with those numbers come questions of valuation. NVIDIA currently trades at a trailing PE ratio of over 46, which is high compared to both the tech sector and its historical average. However, analysts project earnings to grow by more than 40% over the next year, which could help justify that premium if growth continues. Then there's the stock split. In mid-2024, NVIDIA initiated a 10-for-1 stock split, making shares more accessible to retail investors. While a split doesn't change fundamentals, it often adds near-term momentum by increasing liquidity and attracting new buyers. So far, the numbers suggest NVIDIA's financial engine is still humming. But after such a meteoric rise, how much is already priced in? NVIDIA's biggest growth lever is still AI, and it's not slowing down. Partnerships with Amazon, Microsoft Azure, and Google Cloud continue to deepen. At GTC 2025, NVIDIA announced its Blackwell Ultra GPUs will be integrated into Azure, boosting AI capabilities across enterprise workloads. Meanwhile, NVIDIA's software and services business is becoming a bigger part of the story. CUDA remains essential for AI developers, while platforms like DGX Cloud and Omniverse are driving growth through subscriptions and enterprise tools. These aren't just side projects, they're building NVIDIA's recurring revenue base and deepening customer relationships. Beyond data centers, NVIDIA is expanding into high-growth verticals. In automotive, partnerships with GM and others are turning its drive platform into the go-to brain for autonomous and connected vehicles. In robotics and edge computing, platforms like Isaac and Jetson are creating opportunities in manufacturing, healthcare, and smart cities. With all this momentum, NVIDIA isn't just a chip maker, it's becoming a platform company. Even market leaders have vulnerabilities. First up, valuation risk. After tripling in just over a year, NVDA's price already reflects a lot of optimism. A minor earnings miss or slowing growth in AI demand could trigger sharp corrections. Geopolitical tensions are another threat. Ongoing US-China chip export restrictions could hurt NVIDIA's access to a key growth market. Regulators are also scrutinizing AI infrastructure globally, and NVIDIA's dominant position could draw further attention. Then there's rising competition. Big tech players like Amazon and Apple are developing their own AI chips, reducing dependency on NVIDIA. Even startups are joining the race, aiming to disrupt with more efficient or specialized alternatives. While NVIDIA still leads on performance, these shifts could pressure margins and limit future growth. Bottom line, NVIDIA is still the leader, but the runway won't be entirely smooth. Wall Street remains largely bullish on NVDA. As of March 2025, the stock holds a consensus rating of moderate buy, with 39 out of 42 analysts rating it a buy. The average 12-month price target sits at $171.51, representing a potential upside of nearly 46% from current levels near $117. Price targets vary widely, from $102 on the low end to $220 on the high end. Bulls like Bank of America's Vivek Arya see continued upside thanks to NVDA's innovation and market leadership. Others, like D.A. Davidson, remain cautious, citing valuation risks and potential AI saturation. Institutional investors are still loading up. Over 65% of shares are institutionally held, with large funds increasing positions. Recent filings show that big firms like GAM Holding AG have made NVDA one of their top 3 holdings. Despite its sky-high valuation, smart money still sees NVIDIA as a cornerstone of the AI revolution. NVIDIA's fundamentals remain strong. It's a dominant force in AI chips, with unmatched software integration, expanding cloud partnerships, and entry into fast-growing verticals. Financials are solid, with high margins and consistent revenue growth, but there are real risks. The valuation is rich, and the market may have already priced in a lot of future growth. External threats, from geopolitics to new AI competitors, could create headwinds. For long-term investors who believe in AI, machine learning, and accelerated computing, NVDA still looks like a worthy addition, especially if you're ready to ride out short-term volatility. For cautious investors, waiting for a pullback or further earnings confirmation might be the smarter move. This isn't a stock you ignore. It's one you watch carefully and decide based on your risk tolerance and long-term goals. NVIDIA's story is far from over, but is now the right time to buy, or should you wait for a better entry point? Drop your thoughts in the comments. We read every one of them. If you found this video helpful, smash that like button, subscribe to Stocks Telegraph, and turn on notifications so you never miss the next breakout stock. Share this with a fellow investor who needs to see it, and let's grow this community together. Your support helps us bring you sharper insights faster than Wall Street. Thanks for watching, and we'll catch you in the next one.